We're going to do a brief video on AUDUSD technical analysis, AUDUSD analysis, and we've got a daily chart here with a 5-day moving average in green, a red 20-day moving average, and a blue 200-day moving average. You can see that the Aussie against the dollar has been in a bear market since about June of 2021. It's flirted many times with the 200-day moving average here in October. Made an attempt to break out and start to rally back in March of 2022. That failed. Made another attack at the 200-day back in June of 2022 and another one in August of 2022. So it has been bouncing up against from the bottom side, or bouncing off of the bottom side of the 200-day moving average for more than a year. So we're now in a serious bear market in the Aussie against the dollar. You can see it's below the 200-day, below the 20-day, and below the 5-day moving average. And last Friday, the 7th made some new lows here at 0.6354. In a minute, we'll show you some algorithmically generated entry prices for Monday the 10th. But from a technical perspective, the stocks fighting interest rates, Australia's interest rates are not half, but close to half what ours are. They're going to sell the Australian dollar and buy the US dollar, and that's what's going on. It's very, very hard for the countries that have lower interest rates than we do to compete with our higher rates, and that's what you see going on here. From a technical perspective, here's our support all the way back here in March of 2020 at 0.57. So we're a significant difference away from that, obviously, but that's really where our major support is. Do I see that getting hit here in the next week or two? No, but I definitely see it being challenged if we don't get something changing in terms of the interest rates, because there's really nothing supporting this currency. What do I think for this week? I think you're going to probably see new lows down here in the 0.625 range at a minimum. You'll see some down play, I would suspect, early in the week, maybe even down to 0.618, and then eventually you'll see a little rally to back and fill, and then some continued sell-offs down here, because I don't see anything supporting this. It's just going to work its way down in the same way it worked its way up back here in April and May of 2020. That's all that's going on, in my opinion. Let's take a look and see. That's all for entertainment purposes only. Let's go see what RBAM research says about it. We have 1, 2, 5, 10, and 20-day algorithmically generated entry prices. You can see for the Aussie versus the US dollar Monday the 10th, we've got buys 0.6337 all the way across from the 1-day hold all the way to the 20-day hold. The way these work is, assuming your own analysis says it's a good idea, you get in the day of, get out the next trading day at a loss, or take your profits sooner if you get them. Same thing for the 2, 5, and 10. Let's take the 20, get into 0.6337, and then take a profit as soon as you get it, or get out at the end of the 20th trading day just before the market closes. So RBAM is showing buys if we get a decline, and that's what we've got for you for Monday the 10th of October. You can get access to all of our algorithmically generated entry prices for no cost, no credit card required at rbamresearch.com. There's a link in the description below. 190 stocks, the major forex pairs, BTC, crypto, and the most liquid futures contracts. We've got buys or shorts on all of them before 7 a.m. Monday through Friday. Check with us the evening before, because we often update the major forex pairs after 6 p.m. the evening before the market opens. Again, no credit card required and no cost. Keep in mind, everything you've seen and heard on here, including entry prices and my commentaries, for entertainment purposes only. You should always do your own analysis. You definitely trade at your own risk. Hit the like button if you like this video. Please subscribe and leave us a comment if you feel like doing that. We'd appreciate it, and it helps us with the algorithm.